In a world where innovation continuously pushes us forward, one company has dared to dream bigger, to push boundaries and redefine transportation as we know it. That company is Tesla, a trailblazer that has electrified not only our roads but also the stock market. However, as with any journey, there are bumps along the road, and Tesla has certainly faced its fair share of unexpected twists and turns. Today, we're going to dive deep into the electrifying saga of Tesla, taking a closer look at the shocking truth behind its recent roller coaster ride in the stock market. We'll uncover the hidden factors, unravel market mysteries, and explore the untold stories that have led to this pivotal moment. Before we get started, don't forget to like and subscribe to Tesla Stock News for more updates on everything Tesla. With that said, let's dive into the heart of the matter. Recently, we've seen some significant shifts in investor behavior. More and more investors are pulling their money from the stock market and moving it into safer assets like cash and bonds. According to strategists at Bank of America, there has been a noticeable increase in inflows into cash and money market funds. Just this quarter alone, a hopping $145 billion has flowed into these safe havens. This is much faster than last quarter, and it's clear that investors are looking for stability amidst market uncertainty. Government bonds or treasuries have also seen strong inflows, with $127 billion invested year-to-date, on track to break records. Yet, despite all this movement, equities, like Tesla, are not seeing much enthusiasm in terms of inflows. This shift in market sentiment is something Tesla needs to be mindful of as it navigates its future. Now, let's turn our focus back to Tesla. There are a lot of factors playing a role in the company's stock performance, including their Q3 earnings, interest rates set by the Federal Reserve, the ongoing hype surrounding the Cybertruck, and of course, the entire EV revolution that Tesla is leading. The shift toward electric vehicles, EVs, is not just a passing trend, it's a transformation. Electric vehicles are becoming the future of transportation, and Tesla is right at the forefront of this change. The benefits of EVs are clear. They have a smaller environmental footprint, they incorporate cutting-edge technology, and they're slowly changing the way consumers think about cars. This shift is full steam ahead, and Tesla is positioning itself to capture a huge chunk of the growing market. For Tesla, the early part of the year has been relatively successful. Their vehicles have been selling like hotcakes, and much of that success can be attributed to their savvy pricing strategies. As we move into the latter part of the year, we're all wondering how Tesla's vehicles will continue to roll off the lot. Despite the rising interest rates, Tesla has been holding its own with a solid premium price, and they've managed to scale up production significantly. This has allowed them to grab a significant share of the EV market. However, the reality is that you sometimes need to nudge the market in the right direction to accelerate things, and Tesla has been doing just that. But as the year progresses, experts are predicting that price cuts may be slowing down. Tesla might be moving away from this aggressive pricing strategy as they focus on maintaining their market share without relying on constant discounts. One thing that's becoming clearer is the increasing competition in the EV market. As more players enter the arena, the race to capture the largest piece of the market share is intensifying. But Tesla, with its leadership in tech and cost management, has positioned itself as the top contender. They have serious advantages in terms of cost savings, production efficiency, and vehicle design. While they may not rely on price cuts as aggressively for the rest of the year, don't be fooled. Tesla still has the option to make moves when necessary. They're not your average car company. With their continued growth and dominance, Tesla's stock has been stealing the spotlight. In terms of future growth, Tesla is looking incredibly strong. The world is shifting towards electric cars, with major cities and even entire countries setting deadlines to phase out internal combustion engine vehicles in the next decade or two. This is going to ignite the electric vehicle market even further, and governments around the world are making electric cars more affordable with tax credits, rebates, and lower registration fees. It's like the red carpet is being rolled out for electric vehicles. And Tesla is in prime position to take full advantage of this shift. If Tesla can capture half of all EVs on the road in the future, just imagine the revenue potential from car sales alone. And that doesn't even take into account their other ventures. Tesla has been a leader in the EV revolution for years now. Their cutting-edge technology, combined with Elon Musk's visionary leadership, has made the company a household name in the world of electric vehicles. There was a time when the EV charging network was a major hurdle for Tesla, but the company has invested heavily in expanding its charging infrastructure, making it more accessible for EV owners. As more Teslas hit the road, and manufacturing costs will continue to decrease, which should result in even more competitive pricing. All of this points to a bright future for Tesla, both in terms of its market share and its stock price. Let's look at Tesla's recent financial performance. In the first quarter of last year, Tesla raked in a solid $18.8 billion in revenue, a 42% increase from the previous year. Even though they faced a slight dip in the second quarter due to some production delays, they're still miles ahead of the competition in terms of car deliveries. In 2021, Tesla increased its car delivery numbers by a staggering 81%. Now, let's think about the future. Imagine Tesla hitting half of Elon Musk's ambitious prediction of 20 million cars sold by 2030. If each car sells for around $60,000 on average, that would generate $60 billion in revenue just from car sales. Add 15% more from other ventures, like batteries and robotics, and you're looking at $90 billion in total revenue. If Musk's grand vision comes to life, Tesla's gross revenue could skyrocket to an astronomical $1.56 trillion. This is where things start to get wild. If Tesla's non-car ventures make up 30% of that revenue, their stock price could soar to as high as $11,700 per share. Yes, you read that right, $11,700. While this may sound like a fantasy, stranger things have happened in the market. Of course, these numbers are based on educated guesses, but if all the pieces fall into place, Q3 earnings, Cybertruck hype, and more favorable interest rates, Tesla could experience a golden period in terms of stock growth. But, as always, caution is advised. The stock market is unpredictable, and while the future looks bright for Tesla, it's important to do your research and make your own predictions. Keep in mind that the road ahead may have some bumps, and while there's huge potential, there's also risk involved. So what do you think about Tesla's journey in the electric vehicle revolution? Do you believe they're on the fast track to domination, or are there roadblocks ahead? Are you excited about the potential of their stock, or do you have some reservations? What's your wildest prediction for Tesla's future? Share your thoughts in the comments below. And if you enjoyed this deep dive, don't forget to hit the like button and subscribe to stay updated on all things Tesla. Thanks for watching, and we'll see you in the next video, where we continue to explore the thrilling world of Tesla.